Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the S&P 500, the stock market, the Mag 7 stocks, and seeing where things in the stock market are today. And I know a lot of you who watch my channel watch for the crypto videos, and these videos are important to watch because the way the stock market goes does impact and affect the way the Bitcoin and crypto market goes as well. So right now in the stock market, CNN, fear, and greed, we are just recently ticking up into greed. You can see not long ago we were in fear, and on pie vesting, we have gotten into extreme greed as well. Before I get to crypto, a couple things to keep in mind, because I'm sure y'all have heard about the Fed talking about cutting rates in September. And these two charts, I think, really illustrate how things might go depending on the type of rate cut. And on this chart, if we get a 25 basis point cut, at least for the time being, that still looks pretty positive for the stock market. But as you can see, if we get a 50 basis point cut, then it tends to be worse sooner, and that'd be for stocks and crypto. So do know if they're cutting fast and heavy, it's probably not so good within the next year or so. But if they're cutting low and slow, then at least for the next couple of years, we might still be fine. I think this chart reflects this as well. You guys know that in the stock market, I'll show you this on the charts, that we had a 10% correction recently, which is reflected here. And you can see that in either scenario, we rally up into rate cuts. There does tend to be some sort of correction, but on average, about 1 to 2 months out, we have an idea on whether or not we're going to have a big fall and we're going to be bearish for a while, or that things just might grow at a normal pace. So a month or two after the first rate cuts are going to be very curious for me. I think that, again, this is going to be largely impacted by whether or not the Fed does 50 basis point cuts or 25 basis points. So we'll see when we get there. Going over into crypto is still in fear, and overall we have been in this downtrend from greed to fear, though we are in this minor uptrend making higher lows. So could this be a bottom? Maybe, we'll see. But if the stock market is doing well and the crypto market's lagging behind a little bit, then I'd say, maybe good opportunities for crypto as far as dollar cost average opportunities. Of course, nothing I say is financial advice. And really, Bitcoin is cyclical. Right now, we're still at the lower ends of the accumulate, still cheap phase, as this rainbow chart has it, if you believe in that stuff. But what I am looking to do, me personally, is get in when the times are nice and we have good value for altcoins, and then get out as Bitcoin gets overextended. And typically within a year or two of the halving, that is what's happened before. So we'll see. But let's start off with the S&P 500. And right now I have on the stochastic RSI, you can see it flipped positive. And overall, it has stalled out around previous all-time highs. But if it does break above this trend line, you see I have it connected with this top point from August of 22. If we are breaking above that trend line, the next area I'm going to be watching for is the low 6,000s on the S&P 500. And here you can see that even as the S&P 500 got above this trend line, it's come back down to it and tested off of it. Right now, indecisive doji, so we'll see what happens there. But we have to challenge that former all-time high here from July. Let's go over to the VIX, the volatility. Volatility is nice and low. So at the third highest volatility spike since the great financial crisis and the COVID crash. And I can zoom out and show you guys that, so you don't have to trust me, bro, on this information. You can see the dates at the bottom. A lot of volatility in the GFC, of course. A lot of volatility in the COVID crash. I'm wondering in the long term, with rate cuts coming, if this is just maybe a warning shot, a preemptive strike, if you will, of things to come. Maybe we're going to have heightened volatility for longer as we go further on from rate cuts. So that's something I'm personally looking for. Let's go to the US 10-year versus 2-year. This is the yield curve inversion when the Feds, this is a very simplified way of putting it, not getting into all the nitty gritty of, why the banks are lending at certain rates and all that stuff. But when the Fed raises rates, we tend to get a yield curve inversion, and after the yield curve uninverts past the zero line, within about like a year, that tends to be when recessions happen. So the yield curve was testing that zero line. Now it's just hugging on to that 200 week moving average. Unemployment still above 4% right there. So let's get into the Mag 7 stocks and Nvidia. It had earnings, and from what I've been reading is that the earnings reports were great, but people thought it was just good but not amazing. So where are we at with Nvidia right now? And as you can see here, I drew a fib from the recent low to the high. On the weekly, it has flipped positive a couple weeks ago. Let's throw on, well, let's just leave that for now, actually. Simplify things here. So there's a couple ways I like to look at charts, a couple different indicators. One, you saw the stochastic RSI, the one I just got rid of. As soon as that flips positive, blue above orange, tends to be a decent area to dollar cost average in. Now, I'll say that with a little caveat. This is a stock that's done an 11x since about 2 years ago. So, do be careful. Stocks are running really hot in a short period of time. They can come down pretty well. But what you can see here is that a couple other ways I look at it is with these moving averages. We have the 200-day moving average, the 100-day, the 50-day, and the red is the 20. We also have the Fibonacci retracement. You can drop from the low to the high or high to the low, depending on how you're looking at it. And I also sometimes throw on buy-sell signals, but if we're green for a while or red for a while, you already know there's a buy or sell signal on there. So those are ways I look at dollar cost averaging in or out. Me personally, as an investor, I'm looking to get in more often. And guys, so many Twitter accounts, or X I should say, and YouTube channels, I see them really overreacting to the earnings reports. And the way that I just try to cut out the noise is, one, kind of stay away from the news a little bit when this stuff happens and just watch the price action. I like to look at the data first and then see what narratives are out there, because sometimes I feel the narratives in the news are sort of saying the opposite of what an investor should be doing. So when the news tends to be bearish, and as I say, when there's fear in the market, we look for opportunities. That tends to be better value times. And right now they said, well, the earnings, they were good, but they weren't amazing. So Nvidia sucks now. But the reality is, well, it's just at the 50-day moving average. And if it came down even lower to the light blue line and the 382 here, the 100-day moving average, I still think that'd be a good area to get some Nvidia. So I'm looking for 111. But if we do get a bounce here, right now we are at the 236 in the 50 days. So if we were to get a bounce there and resume bullishness, 140 is the next level to really look for. But right now we have lower highs. Let's throw on the RSI, the relative strength index. Do we have any sort of divergence? Nothing too clear there, in my opinion. You could argue bearish divergence, but sometimes those take a while to play out. Whenever I'm looking at the best stocks in the world, I'm often looking at least in a bullish market, when it comes down to the 50 line. For some reason, it just loves the 50 line, and when stocks or the RSI is around there for the top stocks in the world, tends to be some of the best value you can find. So I still think Nvidia can remain bullish. I like its level here if you're really believing in the long-term potential of it. But me personally, I wouldn't be buying back into Nvidia unless it got down under the 100 levels again. And again, that is me looking at a very long-term horizon as a value investor. So I'm watching for the 200-day moving average, the 618 fib here at the very least. But if you're doing more short-term stuff, I'd say maybe it can come back down to the 110 level. Let's take a look at Microsoft. Microsoft, last time we looked at it, was bearish, and this time it's come back up. And as you can see, challenging the 100-day moving average. So if it isn't able to get above this resistance, the 236 fib, the 50 and the 100, then I would suspect it comes back down to the 200 and the 382 right there for Microsoft. So maybe look for possible areas around 404 to 400. Next, let's go to Apple. And Apple still relatively high on the RSI, and needs to challenge that former level of 237 for all-time highs. Let's zoom in on the daily and take a look here. So overall, this thing's had so many green days in a row. What do we got? Like 5, 10, 15 green days, even though some of these doji ones are a little smaller. So overall, it is looking pretty bullish. No pullbacks. If you were patient and spending time in the market and checking on Apple each week, then you would have seen, hey, it's at the 100-day and the 0.5 fib. Maybe I'll consider putting in at the high 200s. But you don't want to chase the hype, and I'm willing to be patient. I'm not buying Apple right now, even though it's a great stock. I rather buy when it's testing these moving averages and getting that lower value. That's my personal way of looking at things. Let's put on the stochastic RSI again. Maybe we'll get some areas where I can kind of show you what I'm looking for. So again, when the blue flips above the orange, those are times I like the dollar cost average in if it is a stock I like. So that's one way to look at it. Another way, obviously, are these fib levels, lower fib levels, or the weekly moving averages. I do like to get in when it is at the 50-week moving average, because when the candles stay in touch with the 50 and keep going up, it's still bullish. But it doesn't mean I'm not buying down here. But if I am, I am expecting or anticipating that it could go lower, and I'm just going to dollar cost average in on the way down. So that's the way I look at it. But Amazon right now is still in a downward trend, and I wouldn't be surprised if it came back down here to the 50 week moving average, as well as the fib here, the 786. This one, by the way, you can see how I drew the fib differently because the price action is still in between the prior all-time highs. Yes, we made a new one, but because we're still underneath the all-time high back here, I draw from the high to the low. Let's take a look at the daily and see what we got. So the daily, you can see here resistance at the 50, 100 down to the 200 daily. So I don't hate Amazon there. I think on the daily, I kind of like that a little bit more. Could be a possible time for a turnaround. Another couple indicators you can use. One, I like the 1020 MA crossover. That shows green and red dots for buy and sell signals. So Alphabet, Google, this one as well looks like maybe it'll come back down to the 200 again. So I guess you're pinching pennies a little bit if you're thinking long term. But yeah, 158, and then possibly this former all-time high from a long time ago, 151. So I would be more willing to bet that maybe it'll get a bounce right there. Something I watch for on these stocks is, what moving average does it really like when it's at the deepest value? You can see here Google, since this uptrend, has liked that 200-day moving average deep value a lot. So if we are going to remain in an uptrend for another year or two before a recession with all the rate cuts and yield curve inversion, all that stuff, I think this is decent value here. Meta, as far as Meta, it still has to get to that 1618 fib area here around 567. So keeps kind of getting to this 536, 540 area and then falling off. But I do like how overall we have these higher lows. So maybe it'll come back down to the 50 or 100, and then we'll finally challenge that level, but we'll see. And then the last stock here as part of the Mag 7 is Tesla. Tesla, I think this is a similar story as last week, but has all this convergence of the 0.5 fib, the 50, the 100, the 200 has that big old trend line there. As far as the stochastic RSI, look at that. Blue's flipping above the green there. And we do have this wedge, this giant wedge forming. And yes, we got above it. Is it a fake out? I don't know. But what is curious when we take a look at it the monthly, it's only a wick. So the wedge is still honored as far as I'm concerned. But I'm really curious to see by the time Tesla breaks out either way significantly, is it going to be above this wedge and stay that direction, or is it going to be below? So maybe we'll see it break out, retest that trend line, and then continue up higher. Right now, this is looking pretty decent, but the curious thing is it's still not convincingly getting above this trend line and staying there. So we'll see what happens there with Tesla. Anyways, guys, hope you enjoyed the video. I may or may not live stream tomorrow. looking at doing some hiking over this Labor Day weekend. So if I don't do any videos, you know, same advice goes for you guys. Don't spend too much time looking at the charts. Make a plan, know which indicators and ways you want to look at charts, which stocks, which cryptos you want to check, so you can just look at each one for just a minute. Make a list of like maybe 5 stocks, 5 cryptos. Know which ways you want to look at it. Make a plan on where you want to enter in. Again, nothing here is financial advice. It's just entertainment and what I like to do. But that way you can go out and enjoy your time. So hope you guys are going to enjoy your Labor Day weekend. And if you want, in the comments below, if you feel like, please share what you plan on doing this Labor Day weekend. So I'm going to do some hiking, maybe some kayaking and all that stuff. Anyways, thanks for watching, guys. Take care.